Hi everyone, I'm Ishan Sharma, and in this video I want to talk about taxes, or how can you actually save taxes legally. Right? We'll be talking about exemptions, we'll be talking about deductions, and we will not be talking about evasion. Tax evasion is illegal, do not do that, but we'll be talking about how can you legally save taxes. We'll first look at a salaried employee, and then we will take a look at how much tax you need to pay if you are a freelancer working in India, right? So I'll be covering all of these things. Recently, a CA that I'm working with filed my income tax returns for the year 2020-21. So I learned a lot about how all of these things really work. So I thought of sharing with you exactly that. So we'll talk about all of these things in this video. Make sure that you hit the like button and subscribe, and let's get into this one. First of all, if you are an employee, you should take a look at your salary slip, in which first of all you'll be having the basic salary, then you would be having some allowances. For example, you have house rent allowance, you can have a travel allowance, you can have some reimbursements for things like your mobile internet, whatever food you're eating, some coupons that they might give you, Sodexo and things like that. So these are all the different components that you have in your salary slip. For the basic salary, you obviously have to pay tax on that, but then if you look at these allowances, you can take exemptions from these allowances. So for example, you have house rent allowance, right? So government is expecting that you will be using this for paying your house rent, obviously. So they don't want to burden you with the tax on this particular segment of your salary slip. So in that case, you can take exemption of house rent allowance from your net income. And then you have the travel allowance. So basically whatever amount you spend traveling somewhere in a particular year, you can take that and you can exempt that from your total salary that you have. After that, if you have kids and they go to a particular school or college, whatever tuition fee they have, you can exempt that as well from your main salary. And then whatever amount is left is going to be your taxable income. Now I will leave a link in the description from which you can learn more about exactly how much exemption can you take from each of these allowances, right? So these allowances and the reimbursements that you get, you can take exemptions from this from your salary slip. Now moving on, then you have the next segment, which is going to be deductions. Deductions are basically ways in which you can further reduce your net taxable income. So first of all, we have something called as ATC, which is going to be all about your investments. Number one is going to be ELSS, right? ELSS is Equity Linked Savings Scheme. So these are basically equity mutual funds in which you can invest, and whatever amount you are investing can be taken as a deduction from your taxable income, and then we get to the net taxable income that you have to afterwards pay. Since it is investment declaration season, your HR might have asked you for your certificates, and you can invest in top ELSS funds and save up to 46,800 rupees in taxes, and you will also get an instant investment proof. That's where you can check out Black App by ClearTax. You can save maximum tax with the help of Super Saver packs on the Black App. These packs include top ELSS funds that are curated by experts and are rated by Morningstar. And with just one click, you can invest in top ELSS funds hassle-free. You can also view the top ELSS funds that have been consistently performing well for the past 3 and 5 years. You also get HRA calculator, income tax calculator, rent receipt generator, and over 50 plus tax saving tips on the app itself to maximize your savings. You also get to learn about other tax saving options like tax saving fixed deposit, PPF, and national savings certificate on the app itself. You can download the Black App from Play Store and App Store with the help of the link in the description. With that said, now let's move on to some other ways in which you can save your taxes. Now there are limitations to how much you can invest and how much deduction can you actually take. So these are basically going to be 1.5 lakh rupees is what you can maximum get as a deduction from the ATC section. Okay, that basically means that you can either invest 1.5 lakh rupees in an ELSS scheme itself and you can get a deduction of 1.5 lakh itself, or you can also invest into other segments of the ATC section. So for example, you have something called as National Savings Certificate, in which you have to basically go to a post office to get this thing done, and over there you basically get an interest rate of 6.8% on your capital, and this is going to be fixed. It does get revised every few quarters, but this is what you should always keep in mind. Now, basically what happens is you have a lock-in period of only 5 years in a national savings certificate, and after that you can take it out if you want to. You can also invest into public provident funds, which are basically going to be having a lock-in period of 15 years, and then you can increase it by 5 years every single time. Now you can invest about 1.5 lakh rupees every single year into a PPF account, and you get a 7.1% interest rate. Now this might not look like much, but the returns that you get from this particular PPF account is going to be completely exempt from taxes. On top of that, this scheme is backed by the government of India, so it's going to be extra secure for you. Now you can invest how much ever you want to in all of these different schemes, but at max you're going to get a deduction of only 1.5 lakh rupees from this in every single year. So this was section 80C for deductions. You also have something called as Sukanya Samriddhi Yojana, from which you can basically have a girl child and you can invest into their account, and you have a lock-in period of about 21 years. I will not go into depth about that. I'll put some link in the description to learn more about that if you're interested. But then you also have something called as National Pension Scheme, in which you can also invest if you want to. So that is basically section 80C. Then we have section 80D, which is going to be about the medical insurance. So if you have a medical insurance premium of about 12,000 rupees, you can get a deduction of 25,000 for yourself and about 50,000 for your parents. So that's how that is going to work. Then you have section 80TTA, which is going to be about your savings account. So if you have a savings account interest that you got in that year for about 8,000 rupees, you get a reduction of about 10,000 rupees from that as well. Now there are other ways as well in which you can get deductions. For example, if you have some home loan and the interest on that home loan can be deducted from your taxable income. So that's basically how that is going to work out. So once you have the exemptions, you subtract that with your actual income, and then you have the deductions, you subtract the deductions as well. Then we get to your net taxable income, and depending on what regime you are choosing, you can either go with the old regime or with the new regime. You have to pay the taxes accordingly. So as you can see on the screen, depending on what tax slab you fall into, you will have to pay the taxes accordingly for that particular slab. Also, for a particular year, when you get your health checkup done, you can get a deduction of up to 5,000 rupees on that as well. So these were all the basic deductions as well as exemptions for a particular salaried employee. Now let's go and take a look at the next thing, which is going to be freelancers, right? So for freelancers, what happens is that, first of all, let's just say that you have an income of 25 lakh rupees, right? So on 25 lakh rupees, what you need to do is you can actually reduce that amount by looking at your expenses, right? So let's say under you are having 5 different freelancers who are working with you, and you paid, let's just say 5 lakh rupees to them. You can deduct that amount from your actual income. So let's just say it was 25 lakh rupees previously, then it will become 20 lakhs. And then the tax that will be levied on you would be on that 20 lakhs itself. So that is basically how this works. So once you subtract all of your expenses from your main revenue for the particular year, then you get to the actual profit of your particular business. And that is what you will be taxed on. There are 2 important things to look for. One is called as 44AD, that is a section 44AD, it's a scheme. Second one is called as section 44ADA, which are basically for professionals. 44AD is more for businesses. So both of these are presumptive taxation schemes. What that means is that we are basically presuming, instead of actually giving you the complete invoices, giving you all the reports, giving you the complete book, all the audits and all that, I'm just presuming that this much was gone in expenses and this is the amount that was left, and I will be taxed only at this amount particularly. So this is done so that all the small businesses like us, if you are a freelancer or if you're just like a small business owner, you don't have to go through the pain of hiring, CAs, of doing all the auditing, doing all of these things. You can just focus on building your business and you don't have to worry about the other things. So just to give you an example for 44AD, let's just say that some business owner has about 1 crore rupees in revenue in a particular year. So they will just pay a presumptive tax that is going to be 8% of their total revenue. So they will basically just pay 8 lakh rupees and they will be done with that. Okay, they don't have to go into the complications. They don't have to worry about anything else. Just pay 8% tax. That is going to be it. That's basically how the 44AD scheme really works. And it has a upper limit of only 2 crore revenue. So if the revenue exceeds from that, then this is not going to be applicable. So this is going to be only applicable for small business owners. Then we get on to 44ADA. 44AD was more for businesses. 44ADA is more for professionals. The way this works is that when you have a revenue of that is less than 50 lakh rupees as an individual freelancer, then you can use this scheme and you can basically just say that 50% of my total revenue is for expenses, without even showing the actual proof, without showing the receipts, the invoices and things like that. You can just assume that to be taken as expenses. Then you are left with the rest of the 50%. Then you invest into ELSS, for example. You can invest into PPF, you have National Savings Certificate, and once you do that, then whatever you are left with, that is going to be your net taxable income, and that is what you will be taxed on as an individual freelancer. Also, if you have an income of more than 20 lakhs per year as a freelancer, then you should probably get yourself a GST number. I will also be doing that soon for my own, like as a sole freelancer. Of course, as I'm working in MarketUp as a director, we have a GST number for MarketUp. But for me personally, I will have to get that as well. And then once you have that GST, you will be paying about 18% GST. So for the next time, whenever you are putting out the invoice, you will be adding that 18% extra GST for the client to pay. After that, you also have your TDS, tax deduction at source. So in India, that happens a lot. Whenever you're working with Indian clients, they tend to cut your TDS, that is about 10% from your main invoice amount. You can always go to your traces form, also called as form 26AS, to view exactly how much TDS you are paying on that particular year. It gets updated every single quarter. So you can basically look at exactly how much you're paying and from which client it is going to be. Also, one thing, if you are a freelancer, you would probably need to fill the ITR 4 form or the ITR 3. Most likely it's going to be ITR 4. And if you are a salaried employee, then you will have to fill the ITR 1 form. So keep this one thing in mind as well. Also, if you're just thinking, if you get payments from your foreign client, it isn't anything different. It is going to be treated as the same revenue that you're generating as a individual freelancer. So that's basically how that works. I hope this video was insightful. Do take a look at Black App by ClearTax, but I will leave some really important links in the description for you to learn more about taxes and how can you save if you are a salaried employee. And so do take a look at that, learn about exemptions, learn about deductions, and get started in this field of becoming more aware about taxes. Also, do share this video with your friends and tell them about how taxes really work. I will see you all in the next video. You can also follow me on Instagram as well as Twitter. I'll see you again.